Ripple XRP is crushing every segment one financial asset can. Hype is on another level. Why is that the case? And what are potential major things expected in near future is exactly what we will cover today. And even if you are a complete beginner, you will have no problem understanding, because every single video on Bitcoin Academy is 100% beginner friendly. Let's start with what might be the biggest catalyst for XRP's current momentum: the end of its years-long legal war with the U.S. Securities and Exchange Commission. After nearly 4 years of courtroom back and forth, appeals, and regulatory uncertainty, the SEC formally dropped its remaining claims against Ripple Labs in early 2025. And while XRP had already scored a partial victory back in 2023, when a judge ruled that its retail sales didn't constitute securities, this full and final withdrawal marked a dramatic turning point. For the first time since 2020, XRP is no longer carrying the legal baggage that scared away so many institutional players. The implications are massive. Almost immediately after the SEC dropped the case, institutional interest in XRP surged. Hedge funds, market makers, and financial institutions that had kept their distance are now revisiting XRP as a legitimate, regulatory-compliant digital asset. With that cloud lifted, exchanges in the US moved quickly to relist XRP with full trading pairs, and previously sidelined liquidity returned to the markets. But it wasn't just about price movement. This was a credibility reset. Ripple and XRP can now engage with regulators and governments from a position of legitimacy, rather than as an embattled target. From a market psychology standpoint, the end of the lawsuit signals to investors that US regulators are increasingly willing to draw clearer lines in the crypto space, and that XRP, for now, falls on the right side of those lines. While other tokens still face legal scrutiny, XRP's clean bill of legal health has made it a unique asset in the eyes of cautious institutions. Even more importantly, the legal resolution has unblocked Ripple's US business ambitions. After years of focusing on overseas markets like Asia and the Middle East, Ripple can now roll out products and payment corridors within the US market, the largest financial system in the world. That includes everything from enterprise payment solutions to XRP-powered liquidity tools, and even Ripple's own stablecoin, RLUSD. But don't confuse the end of the case with the end of scrutiny. Regulatory clarity is still evolving, and XRP will be watched closely as it expands its footprint. That said, the narrative has shifted. XRP is no longer the risky bet under investigation. It's now the comeback story, the crypto that stood its ground and walked away stronger. And in crypto markets, narrative matters. That's why this legal milestone isn't just another headline. It's a line in the sand. From this point forward, XRP is officially playing offense. Now let's talk about something almost no one saw coming: XRP being included in the US government's newly declared digital asset reserve. In March 2025, the President of the United States made headlines by announcing the formation of a strategic crypto reserve, a digital extension of the country's financial security policy, aimed at safeguarding key blockchain-based assets deemed vital to future economic infrastructure. And among the few assets named in the initial rollout, XRP. This move sent shockwaves through both the crypto industry and traditional finance. While Bitcoin and Ethereum were somewhat expected, given their global adoption and institutional integration, the inclusion of XRP sparked intense discussion. Why XRP? Why now? According to US Treasury briefings and Federal Reserve coordination documents, the justification lies in XRP's technical capabilities, real-world utility, and its potential to function as a liquidity bridge across different currencies, something central banks are beginning to prioritize more than ever. This isn't just symbolic recognition, it has real implications. With XRP officially included in a government-curated reserve, Ripple and its asset now find themselves in a unique policy lane. It gives regulatory cover for US-based financial institutions to explore XRP integrations without fear of legal ambiguity. That's a huge reversal from the uncertainty of just a few years ago, when the SEC lawsuit kept major players at arm's length. Institutional reactions were swift. Within days of the announcement, large US banks, payment processors, and fintech firms reportedly reopened their internal XRP research programs. JP Morgan, which has long maintained its own blockchain network, Onyx, acknowledged XRP's renewed potential for cross-border value exchange. Meanwhile, Ripple's RLUSD, a USD-backed stablecoin initiative, was formally invited to join an interbank pilot testing CBDC compatibility across jurisdictions. From a geopolitical perspective, this also signals a shift. The US is no longer trying to suppress innovation in digital assets. it's trying to manage and integrate it. And XRP, with its international reach and existing partnerships with more than 300 financial institutions globally, fits neatly into that vision of a multipolar, blockchain-powered future. Still, let's not pretend this makes XRP immune to future volatility or competition. Strategic reserves are a political decision as much as a technical one, and inclusion doesn't mean guaranteed dominance. But it does mean one very important thing. XRP is now officially on the table when governments talk about the digital future of finance. It's not just a coin for traders, it's becoming a strategic asset. That changes how it's perceived, how it's regulated, and how it may be adopted in the coming years, especially if the US continues to lean into blockchain infrastructure. Moving to the next wave of momentum, the ETF narrative. In early 2025, a major financial domino fell. The SEC approved Grayscale's request to convert its XRP Inclusive Digital Assets Fund into a publicly traded trust. While this isn't yet a pure XRP spot ETF, the ruling cracked open a door many assumed was welded shut. For the first time, XRP exposure found its way onto regulated US stock markets in a semi-official wrapper, and the floodgates of speculation opened wide. Grayscale's fund had already included XRP among its diversified holdings for years, but without the legal clarity previously granted to Bitcoin and Ethereum, XRP's participation always hovered in a regulatory gray zone. That all changed post-SEC case resolution, when Ripple's asset was declared not a security in secondary markets. The green light for Grayscale was both symbolic and procedural, signaling that the SEC may be softening its stance on XRP's investment status. Investors, retail and institutional alike, immediately took notice. Trading volume in XRP surged in response, and major ETF issuers like BlackRock, Fidelity, and ARK Invest began updating their risk disclosures and fund prospectuses to include non-Bitcoin digital assets as possible future additions. Financial analysts now predict that a dedicated XRP spot ETF could debut as early as Q4 2025, especially if mid-year economic conditions push the SEC toward broader ETF approvals in the crypto space. But this isn't just about price speculation. An ETF would provide legal, easy access exposure to XRP for retirement accounts, family offices, and institutional clients that previously stayed away due to compliance risks. If approved, it could unlock billions in sidelined capital, particularly from risk-averse funds that avoid direct crypto custody. This institutionalization would add a new layer of legitimacy to XRP, reinforcing its role not just as a payment token, but as an investable macro asset. There's also a secondary effect. Increased ETF chatter boosts public awareness. Media coverage has skyrocketed, with XRP trending again in mainstream finance circles for the first time since the early 2020s. The narrative is shifting from XRP's legal troubles to XRP's regulatory clarity, which gives financial content creators, news platforms, and advisors a new story to tell. Still, nothing is guaranteed. SEC behavior can change with politics, and approval timelines are notoriously unpredictable. But the fact that we're even discussing an XRP ETF seriously, with major players lining up, shows how far the asset has come. From courtroom limbo to Wall Street contender, XRP is suddenly looking very institution-ready, and the market is watching every step. Let's shift gears into real-world use, beyond speculation and price charts. One of the biggest reasons XRP is gaining renewed traction in 2025 is that it's not just being traded, it's being used. Ripple, the company behind XRP, has quietly expanded its ecosystem over the last 2 years through a mix of global bank partnerships, CBDC collaborations, and infrastructure developments that go far beyond crypto hype. First, central bank digital currencies, or CBDCs, have become a focal point. Ripple is currently assisting several countries, including smaller economies in Asia, the Caribbean, and Africa, in developing and testing their own digital currencies. These pilots often rely on Ripple's private ledger technology, which is a modified version of the XRP ledger, optimized for issuing sovereign digital currencies. This doesn't mean CBDCs are XRP themselves, but it does place Ripple at the core of future payment rails. That's influence traditional crypto projects can only dream of. Second, Ripple's stablecoin, RLUSD, is quietly entering the picture. Unlike generic dollar-backed stablecoins like USDC or USDT, RLUSD is designed to integrate deeply into Ripple's payment ecosystem. The goal is to create a bridge between traditional finance and blockchain-based systems, offering institutions a compliant, regulated way to transfer digital value using a Ripple-native solution. RLUSD is still early stage, but it's being positioned as a stable, programmable liquidity source that complements, not competes with, XRP. Beyond CBDCs and stablecoins, Ripple's existing partnership web continues to expand. Over 300 financial institutions have used RippleNet, Ripple's global payment platform, including names like Santander, SBI Remit, Tranglo, and Novati. These aren't hypothetical partnerships. They're active corridors for remittances, cross-border payments, and business settlements across Asia, Latin America, and parts of Europe. XRP's core use case, on-demand liquidity, ODL, is quietly powering a growing share of these operations by reducing the need for banks to pre-fund accounts in foreign countries. What makes all this important is that these developments don't rely on retail hype or speculative bubbles. They're based on utility, the kind that governments, businesses, and payment providers care about. And with the legal uncertainty behind it, Ripple is now doubling down on its enterprise mission, positioning XRP as a key cog in the machine of international finance. Is it flashy? No, but it's working. Real money is moving through XRP-powered systems every day, and that's what gives the asset staying power in a noisy, volatile market. Now that XRP has cleared major regulatory hurdles and real-world adoption is underway, many assume it has the cross-border payments game locked up. But not so fast. The competition isn't sitting still. In fact, as XRP pushes deeper into global finance, new and old players alike are racing to capture the same market Ripple has been building toward for years. One of the biggest threats comes from other blockchain networks aiming to do exactly what XRP does, but faster, cheaper, or with different technical approaches. Stellar XLM, for example, is often framed as XRP's twin, given its shared history with Ripple. Stellar focuses on financial inclusion and remittances in developing regions, and it has partnerships with companies like MoneyGram and even the UN. While Stellar isn't as aggressive in enterprise banking, it offers a lightweight, open-source alternative that appeals to NGOs and smaller fintechs. Then there's Swift. Yes, the very legacy system Ripple set out to replace. In response to blockchain disruption, Swift has modernized quickly. It now supports near-instant messaging, low-cost corridors, and even blockchain compatibility through integrations like Chainlink's CCIP, Cross-Chain Interoperability Protocol. Swift may be slower to evolve, but its institutional reach is unmatched, and banks are comfortable using it. On the crypto-native side, Solana and Avalanche are exploring tokenized money transfer rails with incredibly fast throughput and negligible fees. These chains are developing partnerships with payment startups and fintechs that want the benefits of crypto without the regulatory baggage associated with XRP. Meanwhile, Ethereum's Layer 2 ecosystem, including Optimism and Arbitrum, is building settlement layers for stablecoins and cross-border payments, leveraging Ethereum's credibility and liquidity dominance. Even private consortiums like JP Morgan's Onyx platform or Visa's blockchain experiments represent pressure. These institutions are exploring permissioned blockchains and tokenized deposits that offer speed, compliance, and internal control without relying on public crypto assets like XRP at all. This surge in rivals doesn't mean XRP is doomed, but it does mean Ripple can't afford to coast. The first mover advantage is no longer enough. XRP has to keep proving that it's not just technically sound, but also adaptable, secure, and compliant in a rapidly shifting environment. In short, the window for Ripple to dominate the future of payments is open, but not forever. The pressure is on to evolve faster than the competition. Whether XRP becomes the global bridge asset or just one of many payment layer options will depend on how well Ripple navigates this competitive landscape over the next few years. As Ripple eyes broader adoption and potential dominance in global finance, a new kind of challenge is slowly entering the conversation. One that's not regulatory or competitive, but technological. We're talking about quantum computing, and while it may sound like science fiction, its future implications for XRP and other blockchains are very real. The cryptographic foundations of XRP, like most blockchains, rely on algorithms such as ECDSA, elliptic curve digital signature algorithm for security. These are currently unbreakable with classical computers. But quantum machines, once fully mature, could theoretically crack them in minutes using algorithms like Shor's. That means private keys could be exposed, signatures could be forged, and the integrity of the entire XRP ledger, or any similar blockchain, would be at risk. Academic institutions and cybersecurity researchers have flagged this threat for years, but it's becoming more relevant as quantum research accelerates. Governments and tech giants are investing billions into quantum labs. Some experts say the first cryptographically relevant quantum computers could arrive within the next decade. That's not tomorrow, but it's not far away either. So what's Ripple doing about it? So far, Not much has been said publicly, but the XRP developer community has started discussing possible upgrade paths. The most obvious route is post-quantum cryptography, replacing today's signature algorithms with quantum-resistant ones. But making such a change is no small feat. It would require a coordinated effort across the XRP ecosystem, developers, validators, exchanges, and institutions, to transition securely without disrupting the network. It's also important to remember that blockchain networks don't upgrade like apps. They require consensus, testing, and rigorous rollout phases. That's why forward-thinking networks like Ethereum are already exploring quantum-resilient cryptographic options and laying groundwork early. Beyond quantum, there's also pressure on Ripple to evolve XRP Ledger in more immediate ways, adding smart contract functionality, improving throughput, and supporting new token standards. These aren't optional anymore. They're becoming requirements to stay relevant in a multi-chain world. Projects like hooks and sidechains are a step in that direction, but they're still in early phases. The takeaway is this: while Ripple's momentum is strong today, its long-term future depends not just on legal wins or partnerships, but on proactive technical innovation. Ignoring threats like quantum computing or falling behind in protocol upgrades could turn XRP into a legacy system, vulnerable to future shocks. Ripple has built a network that's fast, scalable, and enterprise-ready. But the next chapter will test whether it's also future-proof. As we reach the midpoint of 2025, XRP is sitting at a crossroads. After years of legal struggles, corporate partnerships, and global experimentation, the big question finally hangs in the air. Is Ripple's vision about to reshape the financial system, or will XRP get lost in the noise of an increasingly crowded crypto landscape? Let's start with the momentum. XRP's legal clarity in the US, thanks to the SEC formally ending its appeals, has lifted a cloud that hung over it for nearly 4 years. Institutional players who once kept their distance are now dipping their toes in. ETF speculation, digital reserve status, and CBDC partnerships have all reignited attention, not just from crypto-native audiences, but also from regulators, banks, and governments. On the surface, it looks like the perfect storm for a financial transformation. But look a layer deeper, and things get more complicated. First, competition. XRP is no longer the only player in the cross-border payment space. Stellar, Quant, JP Morgan's Onyx network, and even stablecoin networks like Circle's USDC are pushing into the same markets Ripple once hoped to dominate alone. These platforms offer similar speed, lower fees, and in some cases, stronger regulatory relationships. XRP may have gotten a head start, but the race is far from over, and in some regions, it's already behind. Second, adoption versus speculation. Despite years of development, most XRP use today is still driven by trading and speculation, not real-world payments. Ripple's on-demand liquidity product is used by some banks and remittance firms, but the volumes are modest compared to traditional SWIFT flows. The RLUSD stablecoin could help shift this balance, but only if it sees real traction. Third, public perception. Even though XRP is technically sound and legally more secure now, it still carries baggage from years of lawsuits, crypto tribalism, and misinformation. That affects adoption by both developers and users. Ethereum still dominates smart contracts. Solana is the NFT and mobile king. XRP is a remittance tool. It lacks a clear narrative for the average crypto user. So, what does the future hold? The truth is, XRP doesn't need to dominate headlines to win. If it can quietly become the settlement layer for hundreds of financial institutions or the backend for CBDCs and compliant stablecoins, that's a success. But if it fails to evolve fast enough, technically, narratively, and competitively, then the window for transforming finance may close faster than expected. XRP stands at a rare moment of opportunity. Whether it takes the leap or gets overtaken depends on what Ripple and the broader community do next. Let me congratulate you on making it this far. Now you know more than 95% of people regarding this topic. But don't stop here. You can continue gaining valuable information by watching one of these 2 videos you see on the screen right now. Information is power in financial world, and the more you know and understand, higher your chance for success becomes. Don't forget to like, subscribe, and leave a comment on today's video. Best of luck, and see you in my next video.